Hello everyone, welcome back. It's been a while since my last video, but I'm excited to be back with something really interesting today. If you've ever been curious about algo trading or heard people talk about it, you have probably come across a lot of misconceptions. So in this video, I'm going to talk about 5 myths about algo trading, 5 common myths which many traders believe and may not be true. So let's start again quickly to the first topic. What is algo trading? Algo trading is using computer programs to automatically buy and sell stocks, derivatives, anything based on set rules like price and time. So it's essentially a disciplined way of trading where the rules have been set in. The rules are usually fed into a computer. It is theoretically possible to not use a computer for algo trading, but it's practically not easy. So a computer is required for algo trading in which you have made fixed rules. Once the rules have been decided by you, the computer then executes the buy and sell, keeping you away from the emotional part of trading. That's algo trading. But what are the myths about algo trading? Let's start with the most common myth. Algo trading guarantees easy profits. No, it doesn't. Far from it. Here is the truth. Algo trading can help you execute trades faster and more efficiently. It enables you to be disciplined in your trading, but it doesn't mean that you will make money without effort. There is no easy money in the market. You have to have a solid strategy. You need to do thorough backtesting. You must have constant monitoring, and you must have a complete risk management system. And all of this must be managed day to day, minute to minute, hour to hour. So there's nothing easy about algo trading. It's as tough as any other business is, and it should be so. So without hard work, algo trading doesn't make money. So many people who think that they will press a button and the money will come in, they are very much mistaken. That's myth number 1, gone. Let's look at myth number 2. Only big institutions can do algo trading. That's a sense that a lot of people have, and that's not true. With modern platforms, even retail traders can participate using strategies that are meant for retail traders and investors. High-speed computers with split-second strategies are not meant for retail traders, but there are any number of strategies that are designed for a reasonable pace of trading, and retail traders can do algo trading in such strategies very simply and very easily. You can't compete to institutions, so you don't trade the way institutions do. But then the institutions can't compete with you in your niche. So you have a real advantage. You don't have to be a big institution. Let's see myth number 3. You need advanced programming skills to start. Actually, no. See, the whole idea of algo trading is to implement it on a computer. So if you know programming, you are that much ahead. You are certainly better off. But far more important than programming skills are your trading skills, your trading knack. If you have a trading skill, if you have a knack of trading, you can hire any number of programmers. You can't hire traders. You can't hire the skills of a trader. That's very difficult. So programming is good, but if you don't have it, if you have the other side, the skills of a trader, you are on. Doesn't matter. The absence of programming knowledge. Myth number 4. Back trading strategies will always work. You backtest a strategy and then say, wow, I'm done for life. Well, that's a myth. Back trading strategies can fail from the day when you start using them in real markets. Backtesting is what? We go into the past and see what happened in the past. That's decent. That's the reasonable way of working, because we never know about the future. So the only basis we have for decision making is the past. But the past success of a strategy, and especially a simulated past success of a strategy where only a simulation has been done, that doesn't guarantee anything at all. It just tells us that we are better off than the others who haven't even done this. Or rather, I should say that with one eye, we are better than people who are completely off, can't see anything. But that's about all. The fact is that backtesting simply tells us that the past was decent. It does not give any guarantees about the future. So we have to be extremely careful with our risk management processes. And myth number 5, algo trading eliminates all emotions. Actually, theoretically it does, but in real life it doesn't. The first emotion is when you have to select a set of strategies, you have 100 of them, you have to choose 5, your emotions come into play. Then you select symbols to trade, I like this or I like that, again your emotions come to play. When you really start trading, sometimes you have big profits, sometimes you have big losses, and then you decide, okay, let me abandon my strategy, abandon my system, and let me take the profit, or let me cut the loss, let me do what I want rather than do what the strategy wants. Again, emotions come into play. So emotions are an inevitable part of human nature. It is for us to maintain as much discipline as we can and see that the strategy works without emotions, but it doesn't eliminate them. We are humans after all. So these are 5 myths about algo trading which I've shared with you. I hope you enjoyed it, and I hope we'll keep on meeting again and again.